Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it would seem that the market has kicked off to a slow start to the new week after Friday's strong sell-off. After rejecting the 60-day moving average, the market is now poised for a further down test that could see anywhere as low as 65.90 area. Where I've outlined here, the market was relatively bullish as we've got an inverted hammer, or should I say near enough three inverted hammers, and the market now may stage a weaker play into this week as the dollar index, which measures the greenback strength against a basket of six major currencies, has staged an impressive rebound after there is once again many Fed officials looking at a potential rate hike this coming May. And after Friday's rattle of rate hikes, we could found that the dollar was stronger and therefore sent the euro lower and posted an engulfing candle that waits confirmation. That is a break anywhere from around 109.60. From there, we could see further weakness into the coming session. Looking at the technicals, we don't have confirmation as of yet, and we don't have confirmation of this actual candle. But if we do see a break of, as I mentioned, around 109.30 area, or maybe a little bit higher at 109.50-60, then the confirmation will probably come through with the rest of the technicals and reinstate the downside somewhere around 107.35. Looking on to dollar yen, well, as I mentioned, the dollar did stage a relatively strong rebound and found its footing. That now looks for dollar yen to look towards 134.80-90. A break there would give further scope to the upside and maybe even back to these highs that we saw in March around 137.5 to 138. Sterling also posted an engulfing candle, and after the price action on Friday took out nearly 2 days worth of market gains and therefore could see further weakness into the coming session after rejecting that for the second time around that 10-month high, that we could see pull back to around that low 123. After gold staged a relatively good rally last week, the market sold off heavily on Friday, and as you can see, wiped out 3 days of gains and now puts a little bit more weaker play into the start of this week. We could see a move towards the downside around 1,996 area, but I feel the market could actually go lower if we see a continuation and maybe down towards the region of 1,970 area. Wrapping up with oil, well, the market still showing bearish divergence from the RSI that could instate another down test. I still feel there is potential of filling this gap that we saw a breakaway rally that was at the end of March. However, I would like a little bit more confirmation coming through and keeping an eye on this RSI as the divergence is strengthening and therefore could put the bear case back towards the bottom side of the range, anywhere down to about $80 and reassess from there. Well, that's a wrap for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to the new week.